retail revolution. Now, let's zoom in on retail loans, the backbone of many economies. In June 2023, retail loans in India surged by an impressive 20.9% year-on-year, a leap from the 18.1% growth seen a year earlier. Housing and vehicle loans led the charge, underlining the confidence of Indian consumers. By August 2023, retail loans accounted for a significant 29.7% of total bank credit in India, up from 24.8% in March 2018. This upward trajectory is expected to persist, fueled by rising incomes, urbanization, and growing financial literacy. Driving factors. Several factors are fueling this retail loan surge. Rising incomes. As household incomes steadily rise, the demand for retail loans follows suit. Urbanization. India's urbanization trend is driving demand for housing and other retail loans. Growing financial awareness. Indian consumers are increasingly aware of financial products and services, leading to a greater appetite for retail loans. 5 challenges ahead. Despite these encouraging trends, challenges loom on the horizon. Rising interest rates. The RBI's moves to combat inflation through interest rate hikes could increase the cost of borrowing, potentially dampening retail loan demand. Asset quality concerns. Maintaining the quality of retail loan portfolios is crucial. A surge in defaults could impact bank profitability. 6. Tackling bad loans. Addressing the issue of bad loans is paramount for the Indian banking system. The latest data shows progress, with gross non-performing assets (GNPAs) dropping by 12.8% year-on-year to 11.05 trillion rupees as of June 2023. Several factors contributed to this decline, including a robust post-pandemic recovery, government initiatives, and proactive efforts by banks. However, India's banking system still faces a considerable challenge, with a GNPA ratio of 7.1% as of June 2023, exceeding the global average. High levels of bad loans can hinder bank profitability and limit their ability to raise capital, potentially impacting lending and economic growth. To combat this, the government and the RBI have implemented measures such as asset reconstruction companies, ARCs, amendments to bankruptcy laws, and the creation of a National Asset Management Company, NAMC. 7. Regional disparities. The latest data also highlights significant regional disparities within the Indian banking sector. The western and southern regions lead in banking penetration, credit intensity, and branch density, while the eastern and northern regions lag behind. These disparities arise from differences in economic development, financial literacy, and infrastructure across regions. The government is addressing these imbalances through financial inclusion initiatives, regional rural banks, RBIs, and priority sector lending mandates. In summary, the latest data portrays a vibrant Indian banking sector, poised for growth and transformation. Strong lending and deposit expansion, along with a rising credit-deposit ratio, bode well for India's economic outlook. However, India's banking resurgence and strengthening India's financial backbone. In the latest data unveiled by the Reserve Bank of India, RBI, the heart of India's financial system beats stronger than ever. Let's take a closer look at the numbers that reveal an inspiring story of resilience and growth. First, banking on growth. Picture this: in August 2023, India's banks extended their lending arms with unprecedented vigor. The year-on-year growth in bank lending soared to a remarkable 17.5%, reaching a substantial 130.4 trillion rupees. It's a rate of growth that hasn't been seen in over a decade, showcasing a sector that's not just supporting but driving economic activities across the board. What's particularly heartening is that this lending surge is not limited to one sector. Industries, personal loans, and agriculture all contributed, with the industrial sector leading the pack at 21.6%, closely trailed by personal loans at 19.9% and agriculture at 14.2%. Second, deposits bloom. The growth story doesn't end there. Bank deposits too are flourishing, posting a robust year-on-year growth of 10.8% in August 2023. The total deposits swelled to 175.4 trillion rupees, marking the highest deposit growth since March 2021. This resilience is an encouraging sign of stability within the sector. This deposit growth story is a double delight, as both savings and fixed deposits saw impressive gains. Savings deposits registered a stellar 11.5% year-on-year growth, while fixed deposits grew by a solid 10.2% year-on-year, fortifying the sector's ability to facilitate economic activities. 3. A willing lender. As of August 2023, the credit deposit ratio of Indian banks stood at 74.4%, a slight uptick from July's 73.9%. This uptrend signals a growing willingness among Indian banks to extend credit to businesses and individuals. It's a vote of confidence in the nation's economic
Thanks for
prospects,
watching.
showcasing
God
the sector's
bless
role
you
as a
with fame
driving
and
force for
wealth.
growth.